All right, let's dive into the sometimes intimidating world of investment banking.
Intimidating, yeah.
I know you're out there and you are interested in getting I think, a deeper understanding of this really complex industry. And we're going to use this excerpt, this article called Pasted Text, as our guide today.
Okay.
And it's not about becoming an expert overnight, but rather about grasping the core of what investment banking is all about and why it matters in the grand scheme of things.
Absolutely. Yeah, I think we can do that. We'll unpack the key functions. We can look at the different players involved.
Okay.
And even touch upon the challenges and the future of this ever-evolving field.
Okay, cool. So let's start with the basics.
Yeah.
What exactly is investment banking?
Okay.
So Pasted Text defines it as this area of finance that helps companies and governments raise money.
Right.
But it seems like they do a lot more than that.
Yeah, I mean it's much more than just fundraising. I mean they're like financial strategists and advisors, facilitators all rolled into one.
Right.
So they can help with buying or selling companies, restructuring finances, and even like navigating the complexities of the financial market.
Right.
And they essentially, I mean, I think at the core they connect those with capital, right?
Yeah, okay.
People, institutions with capital to those who need it. So almost like bridging the gap between big money and big ideas, I guess.
Okay. Yeah, that makes sense. So it's not just about handing over a bag of cash, so to speak. What are some of the key functions that make these financial strategists so essential?
So one of the most well-known functions is raising capital, right? And this can take the form of equity financing, which is where a company essentially sells, pieces of itself to investors through an IPO, right? An initial public offering.
Right.
So, it's like a company going public and sort of offering shares to the world.
Right. So what are some of the current trends that we're seeing with IPOs? Are there any challenges that companies are facing?
Yeah, I mean,
in going public these days?
That's a great question. We are actually seeing a rise in alternative methods of going public. Things like SPACs, special purpose acquisition companies, which have pros and cons compared to traditional IPOs. But certainly the regulatory landscape is evolving. Which is adding another layer of complexity, I think, to the whole process.
So it's not as simple as just throwing a party and selling shares.
Yeah.
It sounds like companies really need.
Yeah, no, it's definitely more complicated than that, and that's exactly where investment banks come in, right? I mean, they provide that expertise, the connections to help companies raise capital effectively. Whether it's through an IPO or debt financing or other means.
Right. Okay. And speaking of debt financing, how does that work?
So think of it like this. Companies can issue bonds, which are essentially IOUs, to borrow money from investors, and they promise to pay back the principal plus interest over a certain period. So investment banks help structure these offerings, determine the right interest rates, and find the right investors for these bonds. It's a whole intricate process.
Right. So they're like matchmakers kind of pairing up companies that need money.
Yeah, that's a good way to...
with investors.
Yeah.
Pasted Text also mentions mergers and acquisitions as a key function.
Right.
It sounds like a high-stakes game.
It can be.
Like corporate chess?
It can be, yeah. Mergers and acquisitions, or M&A, as it's often called, involve companies joining forces either by merging together or one buying the other.
Right.
And so investment banks play a crucial role in advising companies on these deals. So they help assess the value of the companies involved, negotiate the terms of the deal, and ensure that everything aligns with their clients' strategic goals.
Okay.
And sometimes it can even get a little hostile, with competitive bids and takeover attempts and things like that.
Wow. Yeah, it sounds pretty intense.
It can be, yeah.
It makes you wonder what goes on behind closed doors during those negotiations and stuff.
Yeah. It's definitely a high-pressure environment with a lot at stake for everyone involved.
Yeah, I can imagine.
But that's what makes it exciting and dynamic as well.
Right. Okay. So we've talked about raising capital and M&A.
Yeah.
But what about underwriting?
Okay.
That sounds pretty complicated.
Yeah, it can seem that way, but at its core, underwriting involves an investment bank guaranteeing the sale of a company's stocks or bonds at a predetermined price.
So essentially, they're putting their own money on the line.
Essentially, yeah. They're putting their own money on the line, betting that they can sell those securities to investors.
So they're like vouching for the company.
Right, exactly.
And its offerings.
And there are different levels of commitment.
Okay.
So they can choose, firm commitment where they buy the entire offering themselves, or, best efforts where they try their best to sell as much as possible, but don't guarantee the full sale.
Okay.
It all depends on, their assessment of the risk involved.
It sounds like a balancing act between risk and potential reward.
Yeah, it is. It is.
So what happens if they can't sell all the securities?
Well, that's the risk they take.
In a best efforts scenario.
The company might not raise the desired capital, and the investment bank could be left holding unsold securities.
Right. So it's not all smooth sailing.
Right. Yeah.
It's not in the world of investment banking.
It's not.
There's a lot of risk assessment,
a
lot of strategic decision making involved.
Absolutely. And that's just one part of the picture. I mean, we haven't even touched on sales and trading or research or financial restructuring,
right.
all of which are equally important functions of investment banking.
Okay. Yeah, I'm ready to dive into those next. But before we move on, I have one more question about underwriting.
Yeah.
How do investment banks decide which companies
that's a good question
and offerings are worth the risk?
So they look at a variety of factors, including the company's financial health.
Okay.
Its management team, the market conditions, and the overall demand for the type of security being offered. It's a complex evaluation process, but it's crucial for managing risk and ensuring successful underwriting.
It sounds like they need to have a keen understanding of both the company
do you?
and the market.
They do.
Okay, so let's move on to sales and trading.
Yeah.
It seems like those two functions kind of go hand in hand.
They do. The sales teams at investment banks are the ones who connect with big investors like pension funds and hedge funds.
Okay.
They build relationships and present investment opportunities, trying to convince them to buy the stocks or bonds that the bank is offering.
So they're like the salespeople kind of the financial world.
Yeah.
Building relationships.
That's a good way to put it.
And closing deals.
Oh, yeah.
So what about the traders?
Yeah.
What role do they play?
So the traders are the ones who actually buy and sell those securities on the bank's trading desk, and they analyze market trends, assess risk, and execute trades, and they aiming to generate profits for the bank and its clients, and their actions contribute to the liquidity of the market, ensuring a smooth flow of buying and selling.
Liquidity. That's a term I hear a lot.
Yeah.
But I'm not always sure what it means in practice.
Think of it like this. In a liquid market, it's easy to buy or sell an asset without drastically affecting its price. Okay. So, imagine trying to sell a rare antique, versus selling like a popular stock. Mm-hmm. Which one do you think would be easier to sell quickly and at a fair price?
Right. Yeah.
So that's liquidity in action.
Okay.
And investment banks, through their trading activities, contribute to maintaining that liquidity, which is crucial for the smooth functioning of the markets.
That's a great analogy. So they're not just buying and selling for profit.
Yeah.
They're also kind of playing a role in
they are
keeping the entire system running smoothly.
Exactly. I mean, they're an integral part of the financial ecosystem.
Okay. So let's move on to research.
Yeah.
I'm curious to learn more about the role of analysts in investment banking.
Okay.
Are they just crunching numbers all day?
Oh, there's definitely a lot of number crunching involved, but it's much more than that. I mean, analysts they're like financial detectives. They dig deep into companies and industries and even entire economies,
Right.
trying to uncover insights that can, inform investment decisions.
Okay.
So they pore over financial statements, study market trends, and conduct, in-depth research to develop recommendations and reports for investors.
So they're like the brains behind the operation.
Yeah, their research can have a significant impact on market trends and investor sentiment.
Right.
They can help uncover hidden opportunities, identify potential risks, and provide valuable insights that inform the decisions of investors and investment banks alike.
It sounds like a pretty influential role.
It can be, yeah.
What kind of impact can their research actually have? Can you give me an example?
So imagine an analyst who specializes in the tech industry. They might spend months researching a specific company, analyzing its financial performance, its competitive landscape, its future prospects. And if their research suggests that the company is undervalued or poised for significant growth, they might recommend that the bank, invest in that company or advise their clients to do so. And that recommendation could influence the stock price, attract more investors and ultimately impact the company's trajectory.
Wow. Okay, so analysts aren't just working in the background. They're actually shaping the direction.
Yeah, they're shaping the
direction
of the market. That's right. I mean, their insights and recommendations can have a ripple effect throughout the financial world.
Okay. So we've covered a lot of ground, but there's one more function we need to discuss.
Yeah.
Financial restructuring.
Yeah.
This one sounds a bit more intense.
It can be than
the others.
This is where investment banks step in to help companies that are facing serious financial challenges.
Right.
Maybe even on the brink of bankruptcy.
So they're like financial first responders.
That's a good way to put it, yeah.
Coming in to stabilize the situation.
Yeah, they might advise on debt restructuring where they try to renegotiate the terms of existing loans to make them more manageable.
Right.
Or they might help facilitate, mergers or acquisitions. Like, finding a buyer for the struggling company or merging it with, a stronger entity.
Okay.
Sometimes they might even recommend selling off assets, to raise cash and improve the company's financial standing.
So it sounds like they need to be creative.
They do.
Problem solvers.
Yeah. They need to be able to assess the situation quickly, identify the root causes of the financial distress, and develop a plan of action that can put the company back on a path to stability and growth.
It must be gratifying to know that you're playing a role in saving jobs.
It is.
It's deserving businesses.
It can be, yeah.
But what about entire countries facing financial crises?
Right.
Can investment banks help with those too?
That's a great question, and the answer is yes. They can play a crucial role in advising governments on sovereign debt restructuring, which is essentially the same concept, but on a much larger scale.
Right.
So they help countries, renegotiate their debt with creditors, develop strategies to manage their finances, and implement policies that can restore economic stability.
Okay.
It's a complex and politically charged process, but investment banks with their expertise in global finance can provide invaluable guidance.
It's fascinating to see how their expertise can be applied to such a wide range of situations, from helping individual companies to advising entire nations.
That's what makes investment banking, so dynamic and challenging.
It seems like they're involved in every aspect of the financial world.
They are.
So we've talked about the various functions of investment banking, but who are the players in this game?
Okay.
Pasted text mentions different types of investment banks.
Yeah.
Can you explain the difference?
Sure.
Yeah.
So there are three main categories: bulge bracket banks, boutique banks,
Okay.
and middle market banks.
Okay. Let's break those down one by one.
Okay.
What are bulge bracket banks?
Think of them as the giants of the industry. Names like Goldman Sachs, JP Morgan, Morgan Stanley,
Right.
They're the ones handling the biggest, the most, complex deals worldwide. They have vast resources, global reach, and a reputation for excellence. I mean, they're the heavy hitters in the world of investment banking.
So they're the ones we often see, like in the headlines.
They are,
involved in major mergers and acquisitions and IPOs and
exactly. They're the ones with the deep pockets, the extensive networks, and the global expertise to handle the most sophisticated financial deals.
Okay, and what about boutique banks?
Yeah.
How do they differ from the giants?
So boutique banks are smaller, more specialized firms that focus on specific industries or types of deals.
Okay.
So they might be, experts in healthcare, healthcare mergers or technology IPOs or real estate financing. They offer a more personalized approach, and often attract clients who are looking for deep expertise in a particular niche.
So they're like the specialists, kind of the investment banking.
They are. They might not have the global reach or the vast resources of a bulge bracket bank,
right? But
they make up for it with their specialized knowledge and focused approach.
That makes sense. And finally, what are middle market banks?
Okay, so middle market.
Where do they fit into the picture?
Banks bridge the gap between the giants and the specialists.
Okay.
So they serve medium-sized companies, offering a balance of resources and expertise.
Okay.
They might not have the global footprint of a bulge bracket bank or the hyper specialized focus of a boutique, but they provide tailored solutions for their clients' specific needs.
So they're like the Goldilocks of investment.
That's a good way to put it. Yeah, they offer a blend of capabilities that appeals to companies that are maybe too big for a boutique, but not quite ready for the big leagues of bulge bracket banking.
Okay, cool. It's fascinating to see how the investment banking landscape is so diverse, with different types of firms catering to different needs. So so we've explored the functions and the players.
Yeah.
But now I'm curious to understand how all of this kind of comes together in practice.
Right.
What does the actual investment banking process look like?
So pasted text outlines a simplified version of the process, starting with the initial contact and evaluation phase. Right? Yeah, okay. So it all begins when a company approaches an investment bank with a specific need, whether it's raising capital, exploring a merger, or seeking advice on a financial strategy, and the bank then assesses the client's situation, their financial health, their business model, and their overall goals.
Right.
So it's like a doctor's initial consultation gathering information.
Right. Yeah.
To understand the patient's needs before recommending a course of treatment.
So it's about understanding the client's situation and objectives before diving into the specifics. So what happens next?
So once the initial assessment is complete, the next stage involves deal structuring and valuation.
Okay.
And this is where the real financial engineering kind of comes into play. Investment bankers work closely with their clients to design the best way to achieve their goals.
Can you give me an example of what that might look like in practice?
So let's say a company wants to go public through an IPO.
Okay.
The investment bank would help determine the optimal IPO structure, including the number of shares to be offered, the price range, the timing of the offering.
Okay.
They would also work with the company to develop a compelling, story for investors, highlighting the company's strengths and future prospects.
Right.
Or, in the case of an M&A deal, they would help negotiate the terms of the merger or acquisition, including the purchase price,
right,
the payment structure, the integration plan.
Okay.
So,
it sounds like they're playing the role of like architects.
That's a great
designing the blueprint.
Yeah, they need to have a deep understanding of financial markets, regulatory requirements, and their clients' business objectives.
Right.
To create a structure that works for everyone involved.
And I imagine this stage also involves a lot of number crunching.
It does, yeah. Valuation is a crucial part of this stage.
Okay.
And so investment bankers use a variety of methods to assess the value of a company. Things like discounted cash flow analysis, comparable company analysis, precedent transaction analysis. They analyze the company's financial statements, its industry dynamics, and its growth potential to come up with a fair and accurate valuation.
It sounds like they need to be
both
creative and analytical.
They do. It's a delicate balance, and it requires a deep understanding of both the art and the science of finance.
Okay, so they've assessed the client's needs, structured the deal, and determined the valuation. What's the next step in the process?
So the next crucial step is due diligence.
Okay.
And this is where the investment bank, dives deep into the details.
Right.
Scrutinizing every aspect of the deal to ensure, everything is as it should be.
So it's like a thorough investigation.
That's a good way to put it.
Making sure there are no hidden.
Yeah, they examine, financial statements, legal documents, contracts, and anything else that might be relevant to the deal. And they verify, the accuracy of the information provided, assess the risks involved, and identify any potential red flags.
Okay, so it sounds like a meticulous process.
It is.
What are some of the things?
So they might be looking for during due diligence.
Any inconsistencies in the in the financial statements?
Hidden liabilities, potential legal issues, or anything else that could impact the value or feasibility of the deal. It's about protecting their clients and themselves from any unforeseen surprises down the road.
So it's like a combination of detective work.
It is, yeah. Yeah. Due diligence is a crucial step in the investment banking process, and it's one that requires a keen eye for detail and a thorough understanding of financial and legal complexities.
Okay, so they've done their due diligence and everything checks out.
Yeah.
What happens next?
So once they've completed their due diligence and are satisfied with the findings, the next stage is marketing and syndication, especially for IPOs and bond offerings. And this is where they need to get the word out to potential investors. Okay.
And convince them to buy in.
So it's like a sales pitch, kind of on a grander.
Exactly. Yeah, they might organize road shows where company executives travel to meet with institutional investors and present their investment case. They might also form syndicates with other banks to distribute the securities to a wider pool of investors.
It sounds like a coordinated effort to generate buzz and attract investors. What are some of the key factors that investors consider?
Yeah, that's a good question.
When deciding whether to invest,
investors look at a variety of factors, including the company's financial performance, its growth prospects, the industry it operates in, the management team, the overall market conditions, and of course the price of the securities being offered.
Right. So it's a complex decision making process, and investors rely on the information and insights provided by investment banks to make informed choices.
So it's not just about
it's not
flashy presentations and marketing hype. It's about providing investors with the information they need.
Transparency and trust are crucial in the investment banking world, and building those relationships with investors is essential for long-term success.
Okay, so we're nearing the end of the process. What happens after the marketing and syndication stage?
The final stage is execution and post-transaction support.
Okay.
And this is where the rubber meets the road.
Right.
And the deal is actually put into action.
So this is where the IPO kind of goes live, or the merger's finalized.
Exactly.
Or the bond.
Yeah, it involves all the legal and administrative work required to make the transaction official.
Yeah.
But the investment banks role doesn't end there.
Okay.
They often provide ongoing support to their clients.
Okay.
Helping them navigate the post-transaction landscape.
Okay.
This could involve things like investor relations or integration support for mergers or advice on managing their newly raised capital.
So they're not just closing the deal.
No,
they're just walking away.
They're not. They're invested in their clients' success, and they want to see the deal, through to its full potential.
It's impressive to see how involved they are in every stage of the process.
It is.
From the initial idea to the final execution and beyond.
It is.
But who are the people behind all of this?
Yeah.
What are the key roles within an investment bank that make this whole process work?
That's a great question. So let's take a look at the typical career ladder in investment banking, starting with the entry level position, the analyst.
Okay, so what does an analyst do on a day-to-day basis?
Yeah, so analysts are the workhorses of investment banking.
Yep.
They're often recent graduates, with strong analytical skills and a hunger to learn. They work long hours, conducting research, building financial models, preparing presentations, supporting senior bankers in all aspects of the deal process.
So it's a demanding role, but it's also a great opportunity to gain valuable experience and learn the ropes.
It's a challenging but rewarding role, and it's the traditional starting point for a career in investment banking.
Okay, so what's the next step?
So the next rung on the ladder is the associate.
Okay.
And so associates typically have a few years of experience as analysts under their belt, and then they take on more responsibility, managing teams of analysts, interacting more directly with clients, and playing a more active role in deal execution.
So they're moving from the trenches to more of a leadership.
Exactly. Yeah, they're still working hard, but they're also developing their management and client facing skills, preparing themselves for more senior positions.
Okay, so what comes after?
The next step up is vice president or VP.
Okay.
So VPs are more seasoned professionals with a deep understanding of the industry and a proven track record of success.
Okay.
They oversee the day-to-day execution of deals, manage teams of associates and analysts, and maintain relationships with key clients.
So they're the conductors.
Wow, that's a great analogy. Yeah, they're responsible.
What about the investment banking orchestra?
For the smooth execution of deals from start to finish.
And above the VPs, we have the directors.
That's right.
And executive directors, right?
So directors and executive directors are senior leaders, with years of experience and deep industry expertise.
Right.
They lead transactions. Provide strategic advice to clients and manage those all-important client relationships.
So they're the strategists, the masterminds.
They're the ones with the experience and the vision to guide the team and ensure that the deals are successful.
And finally, we reach the top of the pyramid, the managing director, the MD.
So the MDs are the leaders, the rainmakers, the ones who drive the business.
Right.
They're responsible for client relationships, deal origination, and the overall strategic direction of their teams. They're the ones who have, the final say on major decisions and who set the tone for the entire organization.
Wow. It's a pretty impressive hierarchy.
It is.
It sounds like there's a lot of opportunity for growth and advancement in investment banking.
Yeah.
But I imagine it's not all smooth sailing, right?
No, it's not. It's not. It's a demanding industry that requires a lot of hard work and dedication and resilience.
Okay, so let's talk about those challenges. What are some of the things that the people should be?
So one of the biggest challenges is the long hours and the high pressure environment. Investment bankers, they often work long days and nights and even weekends, especially when they're in the middle of a deal.
Okay.
So it's not a 9-to-5 job, and it can take a toll on your personal life.
So work-life balance can be a challenge.
It can be. In
this industry.
But it's important to remember that every job has its own set of challenges. Yeah. Investment banking is no exception.
Okay. What are some of the other challenges?
So another challenge is the constant pressure that come with working in an investment bank.
To perform. I mean, the industry is highly competitive.
Right. And there's a constant need to prove yourself and deliver results.
Okay.
So this can be stressful, especially for those who are new to the field.
So it's not for the faint of heart.
No, it's not.
You need to have a thick skin and be able to handle the pressure.
Sure you do.
What are some of the other things that people should be aware of?
So another thing to keep in mind is the heavy regulation that governs the industry.
Right.
So investment banks operate under strict rules and regulations that are designed to ensure fairness, transparency, and prevent unethical behavior.
Right.
And so this can add complexity to the work.
Right.
And require, a deep understanding of the regulatory landscape.
So it's not just about understanding finance, it's also about navigating.
It is. It's a multifaceted role.
The legal and regulatory complexities.
That requires a broad range of skills and knowledge.
Okay, so we've talked about the long hours, the high pressure, and the heavy regulation. Mm-hmm. What are some of the other challenges
another factor
that come with working in investment banking?
To consider is market volatility.
Okay.
The financial markets are constantly fluctuating, and this can have a significant impact on the investment banking industry.
Okay.
So economic downturns, interest rate hikes, geopolitical events, all of these, factors can create uncertainty and affect deal flow.
So it's an industry that requires adaptability and the ability to kind of navigate through turbulent waters.
You need to be able to think on your feet,
right?
Adjust to changing, circumstances and make decisions in the face of uncertainty.
Okay, it sounds like a dynamic and challenging.
It is.
Environment.
Yeah.
What are some of the other things?
Another thing to consider
that people should be aware of
is the competition. I mean, not just from other banks, but also from new technologies and financial innovations.
Okay.
So the rise of fintech, companies, robo-advisors and other tech-driven solutions is disrupting traditional financial models.
Right.
And investment banks need to adapt to stay competitive.
So it's an industry that's...
It is. It's an exciting time to be in finance.
constantly evolving, and you need to be able to kind of stay ahead of the curve.
But it also requires a willingness to embrace change and adapt to new technologies and trends.
Right.
Exactly.
That sounds like a fascinating and challenging
is.
career path. But before we move on to the next part of our deep dive, I'm curious to know more about the culture of investment banking. What's it really like to work in this high stakes, fast paced?
That's a great question.
Whoa.
And one that we'll explore in more depth in the next part of our deep dive.
Okay.
So we'll delve into, the work environment, the compensation structure, the work-life balance, the overall culture of investment banking.
Okay, cool. I'm looking forward to learning more about the human side of this this complex industry.
Absolutely. So, you want to know where investment banking is going? It's a good question.
Yeah.
I think we're gonna see a lot of those trends that we've already talked about kind of continue to play out. So technology, I think, is going to be, a major disruptive force.
Sure.
The rise of fintech is blurring the lines, between traditional finance and technology. And investment banks will, they'll need to adapt to this changing landscape.
Right.
We're already seeing this, with the adoption of AI and machine learning for tasks like risk assessment and fraud detection.
So is it safe to say that the future investment banker,
I think so, yeah,
will need to be as comfortable with code as they are with spreadsheets?
Absolutely. Data analysis, coding skills, are becoming increasingly valuable. Investment bankers who can leverage these skills to gain insights from data, automate processes, and develop innovative solutions. They're gonna have a significant advantage.
Okay. It sounds like the industry's on the verge of a digital transformation.
It is, yeah.
Which must present both opportunities and challenges.
Right. And one of the key challenges, I think, will be cybersecurity.
Okay.
As banks become more reliant on technology and handle increasingly sensitive data, they become bigger targets for cyber attacks. So investing in robust security measures, staying ahead of the curve in terms of cybersecurity, that's going to be critical.
It's a high stakes game. The potential for significant financial and reputational damage is high.
It is
if things go wrong.
Mm-hmm.
Are there any other challenges?
Mm-hmm. So another challenge is the potential for bias
that you foresee
in algorithms. As we talked about earlier, AI and machine learning are, they're only as good as the data that they're trained on. And if that data is biased, the algorithms can, they can perpetuate and even amplify those biases, leading to, unfair or discriminatory outcomes.
That's a crucial point. It sounds like ethical considerations will become even more important as technology plays a greater role.
They will, yeah. Transparency and accountability.
Financial decision making are going to be key. Investment banks will need to ensure that their algorithms are fair and unbiased and explainable.
Right.
They will also need to be mindful of the potential impact of their decisions on society and the environment.
So it's not just about profits anymore.
No, it's not.
It's about responsible innovation and using technology
for good.
That's right.
What other forces do you think will shape the future of investment banking?
Well, the regulatory landscape will undoubtedly continue to evolve. We've seen a wave of new regulations in recent years.
Right.
And this trend is likely to continue, as regulators try to keep pace with the rapid changes in the financial industry. So investment banks will need to be, agile and adaptable, able to comply with these evolving regulations while remaining competitive.
It's a complex balancing act. Yeah. What about the global landscape? How will geopolitical shifts and economic trends kind of impact the industry?
Well, globalization and emerging markets will continue to present both opportunities and challenges, for the industry. So investment banks will need to navigate the complexities
of cross-border transactions, understand the nuances of different markets, and adapt their strategies to a rapidly changing global landscape.
Right.
They also need to be, mindful of geopolitical, risks and uncertainties, which can have a significant impact, on financial markets and investment decisions.
It's a constantly shifting landscape.
It is, yeah.
And investment banks need to be able to anticipate and adapt.
They do.
But amidst all these external factors, what about the internal culture of investment banks? Do you see that
absolutely
changing as well?
I think there's a growing, emphasis on diversity and inclusion and work-life balance. And banks are realizing that to attract and retain, top talent,
right,
they need to create a more inclusive and supportive work environment. So it's not just about long hours and big bonuses anymore. Yeah. It's about creating a culture where people from diverse backgrounds feel valued and respected and empowered to do their best work.
Exactly. I mean, the investment banks that prioritize these values, they're going to be the ones that attract and retain the best and brightest minds, leading to greater innovation, better decision making, and ultimately greater success.
It's encouraging to see the industry.
It is
kind of evolving in a more positive direction.
Yeah.
But as we wrap up our deep dive into the world of investment banking, I want to leave our listeners with a sense of hope and optimism. Despite the challenges and uncertainties that lie ahead, what are some of the positive trends that you see emerging?
So one trend that I find particularly encouraging
in this industry
is the increasing focus on sustainability and impact investing. So, investment banks are playing a growing role in financing, renewable energy projects, supporting social, enterprises and promoting, environmentally and socially responsible business practices.
So it's not just about maximizing profits anymore.
It's not.
It's about using finance as a force.
It is
for good. Creating a more sustainable and equitable future.
Exactly. There's a growing awareness that financial success and social impact are not mutually exclusive. Right. In fact, they can be complementary and mutually reinforcing. So, investors are increasingly demanding that their investments align with their values.
Right. And investment banks are responding by offering a wider range of sustainable investment options.
That's inspiring to see how finance can be a catalyst for positive change.
It can be, yeah.
Channeling investments towards solutions that benefit both people and the planet. So as we conclude our deep dive, I want to thank you, our expert guide, for sharing
for having me.
Your valuable insights and helping us navigate this complex world of investment banking.
It's been my pleasure. I'm always excited to share my passion for finance.
Okay.
And I believe the future holds tremendous potential for those who are willing to embrace the challenges and opportunities that lie ahead.
It's been an enlightening journey, and I hope our listeners
feel empowered to continue exploring this fascinating world.
Yeah.
Remember, the world of finances is constantly evolving.
Yes,
and there's always more to learn and discover.
Yeah.
So stay curious,
Abstain.
be engaged, and keep diving deep.
Absolutely.